all eyes on the Fed. Will they continue on their hawkish Fed quantitative tightening cycle, raising rates at the fastest rate in history? Or will they pivot off of that? And so what I think is most likely to happen, understanding what the natural constraints of the monetary system are, even though I do believe Jerome Powell and the Fed, I do believe they're serious. I do believe they intend to raise rates and keep them there for a long time. I do believe they intend to inflict massive pain. I also understand that when certain things happen, they will be forced to pivot off of that. Now, they don't care about your stocks. So a lot of people are like, oh, if the stock drops 20% more, they're going to pivot. No, they don't care about your stocks. They don't care about your house. They don't care about how much you're getting paid at your job. Now, they do care about the unemployment rate. So if the unemployment rate gets too high, they do care about that. So that will be one thing. So if lots and lots of businesses go out of business and the unemployment rate skyrockets, that's going to be something that they're going to have to pay attention to. The other thing that they're most concerned with is the liquidity in the banking system. And so if the liquidity starts to seize up or start to act irrational, they're going to have to come off of that. And we're already starting to see signs of that. We're seeing, lots of volatility in the treasury markets. We're seeing the swap lines being tapped into by other nation states. And so I think that's what causes the problem first. My guess is that probably by the end of Q1, we have seen a pause. So a pause to the tightening, a pause to raising rates, a pause to the quantitative tightening. Now, the problem is that what they've been doing has a lag to it. And so we probably don't see for 5 or 6 months the effect of what they've been doing. So that puts us into the summer of next year. And I think, unfortunately, we probably have more pain ahead of us through the middle of next year. And I think we get to a point by Q3 of next year that the pain is probably too bad. I think things get away from them much faster than they have expected. And I say that because everything has caught them by surprise. I've been making videos for over a year saying how inflation is going to continue to rage, and they were saying that inflation is not a problem or it's transitory. They are continually caught off guard by all this. They didn't see this crash in the financial markets, and they don't see what's going to happen next. Maybe it's because they don't want to. Maybe it's because they're blinded by their own hubris. I don't know. But I think by Q2, Q3 of next year, things get to a point that they are forced to pivot. And I would imagine by Q4 of next year, 2023, we are back into an easing situation. I expect asset prices to be at least somewhat equal, if not higher than they are now by this time next year. Now, that is a little bit controversial. A lot of people are expecting a 60 to 80% crash, in the next couple of months. Maybe that happens. I'm not talking about what happens between now and then. I'm just saying where I think we'll be next year. That might happen, which will only force their hand even faster and cause them to overreact to the upside and blow things sky high again, just like they did in the COVID pandemic. All right, what else? I think another thing we're seeing is that negative yielding bonds could be approaching their final days. And so for the last about 12 years, the bond market, which is where people park money into debt, specifically sovereign wealth funds or sovereign nations, they buy bonds. And we've seen bonds actually paying negative, meaning if I loan you money, I typically expect to get my money back plus interest. In the negative yielding bonds, that means I loan you money, and instead of getting all my money back plus interest, I get no interest, and I get less money back than what I gave you. So I'm actually paying you to loan you money. And you might say, that sounds stupid. Why would anybody do that? And you would be right. Why would anybody do that? The answer is because when you have a few $100 billion, you don't have a lot of places to put it. And you might rather be guaranteed a 1% loss than potentially losing 20% like the stock market. So that would be one reason. But what we're seeing is that I believe that 2023 will be the end of that. We had over $18 trillion in negative yielding, which meant $18 trillion was literally worth less than zero. And that has been coming down, 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 down. And I think by 2023, we will see no more negative yielding debt for now. And so all nations, Japan is the last major economy to still keep their rates below zero. They're finally coming back up now that they've kind of given in a little bit to some of these traders. They're going to be forced to continue to give in more. They're going to continue to bring that up, and it will be over 0%. And there will be no more negative yielding bonds for now. I think we'll get there again eventually. Another thing that I think we'll continue to see in 2023 is, like I said, the end of this quantitative tightening, and specifically because of this delay that's happening. Now, one benefit, it's still a loss, but a little bit of benefit is that the reason why, one of the many reasons why all the asset prices have come down is because the Feds have continued to raise rates, which you know. But part of the reason why is because as the Fed raises rates, you get paid now. You can make 4.5% for giving money to the Fed. So if I can give money to the Fed, what they call a guaranteed return, risk-free return, if I can make 4.5% risk-free, why would I take my chance in tech stocks right now? I could lose a lot of money there. I could just make 4.5% there, and they are. But the good news is that you could as well. So right now you're trying to chase, blue chip stocks with dividends at 2% or 3% or 4%. You can just make 4% giving it to the Fed right now. You can go into your brokerage account, go into your money market account, and you can make 3.5%, 4% right now, even up to maybe 4.5%. And so maybe that will continue through 2023. Now, I want to talk about one more thing, the cryptocurrency markets. Let's talk about that for a minute. Now, I do want to say also that, like I said, there's a lot of problems happening. As I said, I think next year continues to get worse. However, big problems create big opportunities. And so when most of the market's going down, there's always somewhere else that's going up. No such thing as good and bad timing. There's always good and bad strategies. And so I see a massive opportunity created by a big problem that we can take advantage of, and it's building wealth in the new parallel economy. This is where all the growth is happening, and if you're not plugged into the parallel economy, you are missing out. I'm having a 3-day live virtual event called, the theme is the Parallel Protocol, where I'm going to teach you everything you need to know about the parallel economy, the opportunities that have arisen out of the parallel economy, how you can take advantage of it to build massive wealth quickly in this parallel economy, and build, grow, protect your wealth as you learn this. And the best part about the parallel economy is it's how we preserve and protect and increase our freedom for ourselves and our kids. You can check it out. Come check out this live event. Go to go.onemarkmoss.com, go.onemarkmoss.com/radio. Go.onemarkmoss.com/radio.